Hey everyone, Alan Shimel, DevOps.com and DevOps TV here at IBM Interconnect 2017. And we're here with Dave Zimmerman. It's IBM's banking guy. Dave, welcome
Thank you so
to
much. Glad to
DevOps
be here
TV.
today. Hi.
So Dave, all kidding aside, IBM's banking guy, you are dealing on behalf of IBM with many of the largest banks
You
out
know,
there and smaller ones.
we have the chance to meet with clients around the world, and I'll tell you, they have a lot of common themes, which is why I'm delighted to be here today.
Absolutely. And Dave, we were just talking a little bit offline about a recent business meeting you had with a client, and it was a large bank, and you brought up the fact that something like 70% of the IT budget is spent on legacy.
Well, I raised the point to the client, the CEO of the bank, and I said, the problem is, the issue is we need agility because of geopolitical and competitive reasons. I said, well, one of the challenges for most banks is 70% of your budget is approximately being spent on legacy. And he challenged me. He said, Dave, that's not possible. And then he asked the members of his team who were there, and one of the braver people in the room put his hand up and said, well, we're really closer to 65%.
Right.
So the point is, and then he said, well, tell me what a fintech is. I said, it's flipped. With not much legacy, most fintechs today may have a very small percentage of their overall budget.
Absolutely. So, you know what I always find fascinating, Dave, is when we talk about technologies like Agile and Lean and DevOps, people tend to think, oh, this is cutting edge. And the last people in the world who are going to adopt cutting edge are those stodgy old bankers. But my experience, anyway, as a fly on the wall at DevOps.com is it's exactly opposite.
Well, what's happening anymore is, the old days, the old saying was, if it's not broken, don't fix it.
Yep.
But the option of not doing nothing or anything is just to sit there is no longer acceptable, because in today's world, if you aren't going to be moving ahead,
You're moving backwards.
You're going to be moving backwards. So the option of just standing put is no longer an option.
Well, and I think it's also the competitive pressure. I mean, you have banks that don't have brick and mortar,
Right.
branches anymore. They're entirely online. You have customers who their only interaction with their bank is through their apps.
That's correct. And it looks like anymore, if you really have to sit down and say, what are the ways I measure my success? So, for example, some of the best practices are, can I get a loan approved for a consumer in 60 seconds or less? If you're a mortgage company, can I cut my overall cost by half? If you are trying to get to market with new products and services, can I do that in maybe 10 or 12 weeks instead of 10 or 12 months? And the way to do that is to take off these weights that you're carrying around your legs called, legacy applications.
Yep. So Dave, I think we're pushing ice to the Eskimos. People, I think, are getting that a bit. How do you make that happen?
Well, if we look at a lot of our clients, it breaks into three groups. There's optimizers, innovators, and disruptors. The optimizers want to save money, this month, next month. That's cool, and we can do some of that. The innovators are much more interesting because they're looking at how do you grow your income,
Right.
how do you grow your revenue, but it are the disruptors that are really cool. They're the ones who want to leapfrog competition and really build their ecosystem. So all right answers depends on the business case.
Got it. So, Dave, now in your role, as IBM's banking liaison to the banking guys, how do you pick who's the disruptor, who's the innovator, right? And craft or help them craft a solution that makes sense
Well,
for them.
you need an IT story and you need a business case. For most of the banks today, it's a combination of, if you look at the business today, revenue growth is 4.6%. Now, it's going down. And how do banks make money? Well, they make loans. So if your single major area of making money is either fee income or in the net interest margins, and you're starting to get hammered, and by the way, 4.6%, back in 2012, it was 12% growth. So all of a sudden, you're seeing going from 12% loan growth down to 4%. So what do? You got to be more agile. If you can turn a loan around in a couple of minutes or days instead of weeks, huge difference to grow your business.
Absolutely.
Yeah.
Makes sense.
So we focused on the areas where the banks make money. Lending, great place to start.
Absolutely. Dave, what do you see? So, we were just here with Angel Diaz talking about, what's after the Blue Mix Garage methods and developer journeys is
Sure.
what he's talking about. What do you see is coming down next for your financial industries?
Well, there's 2 or 3 aspects. One is predictive, and that's what we call cognitive. If you're going to do all this good work in the plumbing, adding in some predictive goes a long way, because you can anticipate who's going to default on a loan, who needs a loan. At the same time, you have to take a look at all the possibilities out there, and that is you really have to look at cloud object storage.
Yeah.
Why is that? Because, in the old days, we put it on tape or old discs or whatever. But, if you can do cloud object storage, we can start to keep things like clicks. We can start to do log analysis to understand our channel growth, where we're getting business, why are people leaving our websites, and then we can go out and monetize that.
Excellent.
Great questions.
Excellent. Dave, I know you've got to run. We
Thanks,
grabbed you
everybody.
to
Great
come
to
in.
see you. Great meeting you.
Nice meeting you. Good
Great
luck
interconnect.
and keep us posted.
Terrific. See you. Bye-bye.
Okay, this is Alan Shimel for DevOps.com.